So I think we have a partial forum. Hopefully Stewart can join us, and you guys will let him in. But I think we should start off with introductions. Nancy, you want to kick us off?
Sure. Hi, everyone. So my name is Nancy Schneier. I'm a Fintech founder. About 5 years ago. Is that good? Okay. I'm a Fintech founder. About 5 years ago, myself and 3 other partners launched a Fintech. And our Fintech is focused on the community banking market. And what we've done, we've developed 2 products that are in market today. One is focused on the lending side, loan lifecycle management, and the other is focused on the client side, client lifecycle management, account opening. What we do is we walk in to banks that are highly manual, and we automate their business processes from front to back.
Julia, please.
Hi, Julia Valentine, co-founder of AlphaMille, a technology consulting firm. Great to be here with you.
Thanks. Hello everyone here and those watching on the screen. Jatin Rajput, former financial services executive for the last few years investing in fintech companies at the intersection of inclusion and climate. So look forward to the session.
Awesome. Marty, any luck with Stewart or not yet? Okay. So as you guys can see, we have a pretty eclectic group here. The panel is on DeFi and Fintech, and I think we're leaning much more towards Fintech based on kind of background. But I think it's important for everyone here to level set, and I would love for Julia, maybe you can give us a little bit of a story on what you view DeFi as, and then from there we can maybe move towards talking about how your guys' respective businesses are either working towards, that aspirational future that DeFi promises, as well as kind of the technologies that you guys are building or investing in.
Thank you. We have seen a spectrum of companies. We've seen smaller banks that have still been looking for that napkin where they roll down the first 10 loans and they're trying to find it and stick it in the database. And obviously, DeFi is the last thing on their mind. We've also seen companies like MasterCard and JPMorgan Chase and a bunch of large organizations that are trying to figure out the difference between blockchain and DeFi and run small experiments of their own. And of course, there's open finance where financial companies realize that they need to share data through the APIs. And we're seeing more and more in terms of the open finance, and Nancy has a lot to add there. And then along the spectrum, there's DeFi. And DeFi, as many of you know, is decentralized finance. It's a major growth sector in blockchain. It offers peer-to-peer financial services and technologies, and it's built on Ethereum. And essentially, the easiest way to think of DeFi is that if you're holding crypto and you don't want to redeem it and put it into, the US dollars or other currencies, then you need something equivalent to the financial networks, to the DTC, to the networks that exist in the USD world. So if you're holding crypto and you want to lend it, for example, right? All of a sudden, there's a need for a decentralized lending system that would allow you to lend, borrow, and earn interest in crypto assets. And AADE, for as an example, is such a DeFi network, and there's $46 billion worth of crypto on that DeFi network. So that's kind of the lay of the land, and then we can obviously talk about the properties of DeFi.
Thanks. So I think it's kind of to summarize what you said. I think there's a lot of there's traditional finance, and kind of since 2015, when Ethereum comes out, we see a mechanism by which we can start doing decentralized finance, right? And I think it's important for us to first kind of see where the challenges exist in traditional finance. And I think, Nancy, you can speak to a lot of community-based banks and where the challenges are occurring. And then maybe we can transition this conversation to exploring how these challenges might be addressed to some capacity with some technologies in DeFi and thinking about that way.
That makes sense.
Stewart's here, but we'll be on in just a second.
Oh, perfect.
Okay. So if we go back to basics, if you walk into a community bank today, and I'm talking today, you're still gonna see what Dan was talking about, paper-based processes, yellow tabs, 10 key keypads, if you may, and no automation whatsoever. So to introduce a concept to these community banks around crypto or DeFi, they'd be like, where do I go from here? Let me get to Wikipedia and look it up, like some of us did last night. So, but it is all part of the same process. It is all the same thought process, meaning how can I automate some of my processes that exist today? What connection points can I build within the bank to make us smarter and faster in how we do things? So the first layer of that is really just thinking of the existing processes and what types of technologies you can layer on top. So that's where we have been working with community banks to address that. And then I do believe the next layer of discussion will be thinking about DeFi, thinking about different mechanisms to process information, whether it be payments, et cetera. But the first leg of the journey is just to identify what's going on today, what the current state is. And the good news is community banks in general, where I would say 2 years ago weren't even interested in having this conversation or this dialogue. And I hesitate to say this, but it's a fact, and it's written in every white paper out there. COVID actually accelerated the need for digital transformation, and that has woken up these community banks where technology can fit in, and that's why I believe DeFi will be the next layer in that discussion.
Stewart, I'm glad you made it. Would you like to give us an introduction? And I think it'll be an interesting presentation on what you guys are doing right now, transition from what Nancy just said.
Thank you, and my apologies. I couldn't get on, so I finally got on. Yeah, I'm Stewart Stockdale. My background is in payment systems and in digital banking. I was most recently the CEO of a company by the name of J.G. Wentworth. Prior to that, I was president of Western Union, the global historic money transfer company. And before that, I ran product and marketing at MasterCard, amongst a couple other roles. And it became clear to me how frustrating it was that the current banking and payments world really didn't serve middle and lower income America. So pre-pandemic, we launched a fintech. It's called Rellevate, and we're a digital bank. So think of us as a challenger bank. In that sense, we're trying to put all of those community banks out of business. And really leapfrog and offer digital banking, with, full-fledged debit cards, so forth, bill pay, what we call expedited bill pay, send money, real-time send money, cross-border money transfer, and last but not least, earned wage access, which is the ability to pay people between pay cycles. So if you work today, get paid tonight. The gig players, the gig economy players are doing that today, but that's translating quickly to everybody else. And so we're at the forefront of all of this value chain to 100% digital, 100% API based, great partners and launching. So we're kind of at this epicenter of what's going on in banking and how do you customize banking for your unique audience. 20 years ago, you couldn't afford or couldn't do what we're doing, but now, there's 5,000 banks in the United States. Many of them I don't think will make the turn, but it's a brave new world out there for sure.
Jatin, so I think it beckons the question of, we're seeing this digital transformation coming across kind of the financial system. Where do you see it going as an investor? How do you see decentralized finance playing a role in kind of the next step of that evolution?
So I think before I can answer your question, I think because I've been from an investment point of view looking at the blockchain space for several years now, And without getting into details, fundamentally blockchain is a technology, right? And technology is always a tool to solve the problem. Now, I think what has happened in the last few years is that blockchain is great technology trying to find a solution, right? So it's like hammer looking for a nail. And Bitcoin is a use case of blockchain. Right? So we had this initial idea that it could be a medium of exchange. And now that narrative is moved towards it being a store of value. But going back to what Nancy and Stewart are alluding to, when I look at investments, I'm looking at what are use cases that can scale. So far, I think it's still early stages to see whether DeFi is going to solve some of these problems, which is to get more people access to financial services, cheaper, better, fairer. And I also look at, like, from an investment point of view, we look at emerging markets a lot, India, Southeast Asia. And I can definitely see there's a lot of application potential there because the market structure, the financial system, those markets are still being developed. And therefore, technologies like DeFi, which are more efficient potentially, could help them leapfrog. So there is definitely a lot of potential, but I think still it is at the very early stages where the mass adoption is still, 5-10 years.
To build on what you just said, blockchain is a tech, and obviously DeFi is an application of blockchain. There's another application of blockchain that seems extremely interesting, extremely promising, and it's not the pure DeFi in the sense of, just financial kind of lending system platform, but there's an application in supply chain, and I'm sure you have a lot to say about that, but let me just introduce the topic. As supply chain of large and medium-sized companies is built, there is always a blind party in the transaction. In other words, if I'm the company and I go and take out a loan, my supplier doesn't know about that. So there is at least one blind party there. Likewise, when the delivery is happening, the bank doesn't know about that. So the bank is now the blind party. In cases where blockchain is used, there are no blind parties. Everybody knows about everything, the entire time. So the way, obviously, there is a financial party involved there, and it's not pure DeFi because there are other parties involved in that, but this is where we see the most promise, to be honest. And I believe that this is where financial companies will jump into the fold and try to come up with some innovative ideas. Because if you throw a little bit of artificial intelligence plus IoT, right, the Internet of Things, in addition to blockchain, you have a very interesting phenomenon of self-coordinated and self-governing operations of the firm. And that is qualitatively a different phenomenon. How it's going to play out, I agree with you that we just don't know. But someone's going to invent that, and when they do, it's going to be a leap.
Stewart, do you have any thoughts on how, have you guys looked at crypto as a potential kind of avenue for your guys' spend? What have you guys thought and kind of what conclusions have you come to? Where do you stand on that? And maybe kind of playing off of what Julia said, do you see a future in where you guys are going?
Yes, and one thing is we did look, and in fact, when we started the project, we were from the very get-go thinking of adding a cryptocurrency component to it, because of the ability to move money around the world using crypto is obviously very logical and very fast. And at the time, if you go back 2.5 years ago, we were really all, in the midst of a regulatory discovery as what is a distributed currency. What is a security? What isn't a security? And at the time, from a regulatory perspective, it became almost impossible for us to really feel comfortable that attaching a cryptocurrency, and remember, we're not an exchange, we would actually be using the currency to move money around the world. We didn't feel well enough that we understood the regulatory noise well enough. So we did all of the components that I described, knowing that at some point in the future we will consider adding a component. Right now, we're fully digital and we're transferring money account to account to different parts of the world. But will we do that via cryptocurrency is a TBD. Once we know that whatever cryptocurrency we use is going to be able to be regulated in the proper manner. Because remember that the key component, it's easy to move the money. It's tough to comply with the regulatory hurdles, money laundering, compliance, where it's easy to get the money there. You got to make sure that it ends up in the right hands. And so that's the part that's still missing in the whole crypto debate. I think, whether you use blockchain as a platform or you actually get into the crypto part, for us, being that we're, attached to a regulated entity in the United States, we just have to feel comfortable when is the right time for that to happen.
Do you guys have any thoughts on kind of where, regulatory bodies are moving towards in terms of like maybe abroad? Do you think adoption will probably happen sooner outside of the United States and kind of migrate towards the US? Or how do you see it playing out into the future?
I think that's a kind of $1 trillion question. I don't know if we had. Now, I think if you look at globally, there are some jurisdictions which are obviously taking a step back. Whenever we have disruption at this scale, there's always an opportunity for somebody else to kind of, take the lead and become a center, right? So we've had jurisdictions which are coming up with regulations to attract talent and attract startups to come and build. Malta at one point, Gibraltar had come up, Bermuda has come up. But I think if you look at I think Singapore is a good destination which has a good sense of credibility, stability, but also very forward-looking regulations. I think the US, the challenge with, like what Stewart said, which is is it a commodity, is it a security, when is it a commodity, when does it become a security, and therefore who's the right regulator, what are the rules. So I think those things need to get clarified. But I think there's no question that as institutional capital is coming into the space, there's definitely going to be more regulation, which I think is a good thing, because that will help the technology to scale and get more adoption. Because right now, today, if you're an individual or a company, what's your biggest fear? Your biggest fear is that your money doesn't, you don't have access to your money, right, or your funds. Until that security, that fear goes away, I think we're still a few steps. And having said that, obviously today crypto capitalization is about $3 billion. It's not a small thing. It's a serious thing. So I'm sure regulations will.
So $3 trillion is half gold.
Yeah, and of course, everyone is watching all of the developments on the digital government. Our governments are looking into digital currencies. And the first question that comes to mind is the moment there is a US government crypto, is the rest of it, what's going to happen with, you know what's going to happen.
Do you think that, right, do you think that we're going to see the apparition of digital currency adoption by governments themselves, or do you think there's going to be basically a stable coin kind of development where you have pegging to fiat currencies around the world? And how do you think that's going to play out, given that there are countries that have effectively banned of crypto?
Well, that's what everybody is watching. That's exactly the question, because a lot of people say this is an experiment that's happening under the government's nose, and they're watching it. And at some point, they're gonna move in and say, we can do this too, by the way. And we've done this longer than you have, you know? So what's gonna happen then? Regulatory risk is huge, I would say, in this area. And I think this is why people say, well, Bitcoin is so great, there's no regulatory risk there, it's just fact, right? And you can apply it to whatever you wanna do. I'm sure you know.
And if I can add, I think if you look at China's, I think, right now taking the lead in terms of what they call as central bank digital currency. I think it's already being experimented. I think fundamentally, and this is my personal view, that if you look at emerging markets, none of the central banks and the governments will want to give up control over the monetary system. So if you do have a transition to digital currency, it will probably be fiat or central bank. And again, to give you a more concrete example, when we look at payments, for example, now blockchain is a very efficient technology to transfer money, but at the two ends, you still need to be able to swap it into fiat for somebody to be able to use that money. Because today, right now, you don't have that circular system where you can use the same digital currencies or other things that you want to buy, let's say milk or bread or whatever, right? So that is a big problem right now, and I think that's why some of these cross-border, crypto platforms are not able to scale that well. And it's not a bug in the technology. It's just a feature of how the markets are set up to
So I do want to open it up for some questions, but before we jump in, let me ask one last question to you, Nancy, and then we'll open it up to those folks online. Do you think in your customer base and community events, are people even thinking about DeFi and crypto, or are they just too far removed to worry about that, and they're kind of trying to solve the problems that are in front of them?
The straight answer is absolutely not. They're not thinking about it. They're struggling with so much day to day just to get the processes in their businesses done. But they are thinking about other things. And I know it's not relevant to this conversation, but they are thinking about building out businesses differently outside of their standard business. There's a big uptick, at least in New Jersey, where I'm based, in the whole cannabis business, which is definitely a think outside the box for these bankers because they're used to traditional deposits and loans. That's the only way they think. So to think about that, and that enters into the regulatory question that you guys were talking about, because when you think about building a cannabis business, there's different regulatory needs that traditional technology and traditional business process don't address. So when we move into DeFi, what you're talking about, that would probably put them on overload. They would explode. I don't think they're ready for it.
So one of the advantages of working directly with the banks and thinking about how they use technology, how they create new products is an understanding of how they interact with the regulators. And people outside of the system think that a regulator would give you a piece of paper and say, you can do this, and you cannot do that, and this is a maybe. It doesn't work this way, unfortunately. So the really challenging part of introducing crypto, and believe me, every retail bank in this country would love to offer their clients something along the side of crypto, because they're not blind to the fact that people are making a lot of money doing that. There was, on the previous panel, someone said that they were in the hospital and doctors, nurses, and everybody's trading crypto. My babysitter is trading crypto, just to let you know. And she came in, he's trading crypto too?
Okay, your son.
No, I trade crypto.
Yeah, okay, so, but when your nanny comes in and says, I won't be able to work here unless you let me bring in my laptop because I'm doing intraday, that's when you know that, of course, every bank wants to offer it. But why don't they? Why don't they explore DeFi more aggressively? Well, it's because they have to venture out there, stick their neck out, do something, and then the regulators will come back and say, yay or nay or maybe. Because it's not like regulators can develop their views outside of this happening. So it's the chicken and the egg. And what we're seeing now is that it's very interesting dance where it's like, I don't know what to tell you up until you do it. Well, I'm not gonna do it up until.
So I just want to make one comment. So here's my comment on crypto and trading. The people who buy crypto in the United States, they've done studies. The ethnicity of people under 30 who buy it are people who are Asian American and Hispanic American. And most of the demographic groups have ignored it. But if you think about Hispanic Americans, they've lived in countries where there's been hyperinflation, right? And so what they want is something that is stable. And so that's why they take it, that's why they use it. So in terms of who's buying it, et cetera, some people would rather take their payment in Bitcoin. You're seeing pro athletes taking it in Bitcoin than in dollars because they feel like there's an inflationary period going on in the dollar. It's straightforward.
Yeah. I was just gonna add one point, because it just made me think of it when you said that about the regulators. So it's not even a question of these technologies are scary and foreign to them. It's the fear that what they'll have to go through next when they introduce a new technology into a banking organization. And we're a perfect example of that. They're concerned with what's going to happen when the regulator comes in. What are you using? What solutions are you using? We as a fintech, which I believe is pretty new, we have to be SOX 2 compliant. So we have to go through a complete audit to make sure that our software is SOX 2 compliant. So with every piece of solution that gets introduced, so can you imagine now, hey, I want to introduce this cool crypto thing? Forget about it.
So I have a question. So not many people, some people are aware who are older, but McKinsey came out with a study in the 1990s saying that only 700,000 people would buy cell phones, mobile phones by 2000, because first they had to go through the step of getting landlines, right? But as you know, that number was outstripping. Somebody said that 80% of everybody in the United States has smartphones now, right? So the penetration is amazing. And do you think that fintech is at a stage where, I mean, a lot of bankers presume you have to go through regulators to, manage your money, and that, maybe they're kind of missing a step? Like, does somebody who's young, who's always done everything using Venmo or whatever on their phone, do they really want to have to go to get a physical bank account versus just move stuff around? And any thoughts on that for the younger generation?
Thank you. So there's a reason why the challenger banks, and there are about 400 challenger banks now, there's a reason that they're crushing it. And one of there are a couple of reasons, obviously, why banks have not really played in this arena. The first one is that if you haven't really gone through the digital transformation that Nancy was referring to, you're constantly being dinged by the regulators, constantly, because you haven't done this, you haven't done this in KYC, you don't have a system to do X, Y, and Z. So you have like it's like a report card that you bring home, and you're not an A+ student at all, right? It's all red. So the last thing you're gonna do is try out something new where you're constantly being dinged for failing on the simple stuff, right? So it's just human nature. You just can't, you know what I mean? Right?
You're like chasing your tail.
You're chasing your tail, right? And so there's got to be that massive effort of getting from under that, being snowed in with all the simple tech stuff that you have to build out, right? Before you go to the more complex stuff. That's one. Secondly, for banks that are doing great, that have healthy balance sheets, there's always a question of why would I want to ruin all that and get into something that can really bring a lot of trouble, but I don't know how much money I'm going to make on any of that stuff, or by improving or playing in the DeFi world, So these are the two forces that have been way too strong. And at some point, something is going to give. It always happens. And in one day, everybody's going to have to be able to comply with something or do something. And then we're going to see a massive kind of market dislocation towards the challenger banks, most likely, and away from, and the market share is just going to shift. And then they'll be like, what the heck happened? So, and we've seen it so many, for anyone who's been in financial services many times, you always wonder why it always has to come in from the challengers. And I think that there are a couple of dynamics maybe I just described two, and I'm sure there's more.
Just do, oh,
I definitely agree. I think demographics is a big part of it, because if you look, forward 20, 30 years down the line, I think, people will be so used to using digital tools and banking that, that's the only way to survive. I think just want to add one more thing about the US versus regulations. I think if you look at the US capital markets, one of the reasons they're the biggest and the most thriving is because of regulatory stability, there's transparency and everything else. And I think that's very critical if you look at the way crypto markets are developing, DeFi is developing, that it's imperative for the US to have a very clear regulatory landscape to maintain that leadership in these capital markets. One last thing, which is kind of a more devil's advocate, I always go back to first principles, which is like, what is the use case? So I know that right now we're living in a world of low interest rates, low liquidity, so there is the only way the markets are growing, totally cryptos is up. Right? The question is, once you have a correction, how sustainable are some of these products and some of these use cases? So if you're looking at from an investment point of view, by all means, if you're a day trader, good luck to you. But from an investment point of view, when I look at it, I look at long term. What are the use cases that are really going to survive in multiple cycles? But having said that, I think there's a lot of promise in this technology. So it's exciting times for fintech, exciting times for blockchain.
Yeah. This morning there was a conversation among some people, and they concluded that Bitcoin was a storage, basically. And as such, it was sort of a hollow storage, not a lot of value to it. But what I look at it more from as a utility, right? That it allows transactions to take place. It allows payments to take place. That's why El Salvador adopted it. That's why a number of other countries are now lining up to do it. We had Moro on yesterday, who's from Switzerland. He's talking about the exchange they're setting up there specifically to allow the transactions of securities through this. And I wanted to get your views on the value of crypto and this world of exchanges, things along that line. So,
Does anyone want to take a stab at that?
I just want to share this screen that Dan Moorhead published yesterday. This is Federal Reserve assets that they purchased. Everybody keeps on calling Bitcoin a bubble, but every time there's a crisis, the Fed purchases more assets, right? So it's artificially keeping them inflated rather than letting them find their true price.
We don't know how the story is going to end,
Yeah.
or which way it goes. So it's,
Right.
Sorry to answer your question. Question around Bitcoin minimum exchange. So I think definitely like cryptos, there is a payment minimum exchange use case. But I think Bitcoin itself is, while it has the longest track record, but the underlying technology is not that efficient for fast payments happening. So there are other technologies that are getting built on the Bitcoin. Layer technology, there's convenience payments and parts of it. I think that is a big use case. But like I said, like at least if you're looking at cross-border, you have to look at the billions, which is not a non-trivial issue.
Stewart, would you like to add something to that in terms of kind of how you use Bitcoin and basically as a storage of value versus a currency, like a fiat currency that could be leveraged and where it's going?
Well, first and foremost, if you look at the price of it, it speaks for itself, right? So a lot of people think it's worthwhile, and more so lately. But I think what's important to think about is that are we in the late stages or in the first or second inning of the whole cryptocurrency process? And in my opinion, we're still in the really early stages. I don't think anybody's going to doubt that blockchain and cryptocurrency are here to stay and will evolve as a value exchange mechanism as well as a savings mechanism. So both are going to be here, whether it's going to be Bitcoin long-term or, China followed by another market end up putting a centralized currency and really going to and really rock it. You had a number of examples of people trying it. You've got, thousands of coins for sure. You've got big companies that have announced, you've got banks that are playing with it. One is going to take hold, and you've got to believe that the central governments around the world are going to, have their say because they're not going to want to lose control. So I think cryptocurrency is absolutely the future. I don't think anybody's going to debate that. Have we figured it out? I think is the question.
So John, something that you said caught my ear was you weren't sure where kind of Bitcoin or crypto is going on the DeFi side, and I think there, like you said, there are a number of challenges, right? But the interesting thing to me is that DeFi is replicating a lot of the existing traditional finance services now, and there's like, how do you square that opportunity? How do you estimate it as kind of a potential investment vehicle in venture capital as a interesting target to allocate towards?
I think that you're absolutely right. I think a lot of the same financial tools are being now rebuilt on the blockchain, right? So you have lending. DeFi effectively is a margin lending product. So that's what it is at the core. Now the question really is that what benefits does that have versus the overall have? So is it cheaper? Is it faster? Currently, right now, it's giving much better returns for sure. Like you can get 69% return if you're new farming on DeFi. In a world where your interest rates are negative, obviously that's it. Now, how is that happening? How sustainable that is? I don't know. I've talked to a lot of people to understand how you can get a 69%. Nobody can give me a clear answer, but it's happening. Yeah. And then you also have risk of what if so the counterparty risk, right? But having said that, when you're looking at it from a venture capital point of view, now that the technology is maturing, I think the other big thing is that you have a lot of talent going into this. A lot of young engineers, not just in the US, but to Marty's point, in China and India, a lot of smart people are going into this space. So when you look at it from a venture point of view, that's the great situation. Like you have good technology, promising technology, but a lot of talent going into it. That's what VCs do, right? But so when you're looking from a portfolio building point of view, that's when it becomes interesting because you don't know which one of these will succeed, right? So you have to kind of put that portfolio perspective in place, and maybe you have to pick a few bets. But definitely there will be unicorns and decacorns will come out for sure.
I agree that there are, in DeFi, what we see is the almost replication of what we already have, right? But philosophically, it is the diametrically opposite. Philosophically, it's a different system because it's trustless. The current system, the current financial system we have is based on trust, and centralization means that there is someone there in the middle, a bank or an exchange, and that party ensures that everything is done correctly and the transactions are settled, etc. But not only that, it's much easier to control and regulate that kind of system. Now, DeFi is trustless, meaning it's completely autonomous. And even the governance tokens, we had a conversation about that, right? There are governance tokens where people are voting to implement certain things, and never would you see an exchange say, oh, I'm just going to give it to you and let everybody decide, right? You're not going to see this in the current system, but you do see it in DeFi. So you can get that token and everybody can, vote and define the rules. It's a completely autonomous system. How do you regulate something like that? So I think that it is so fundamentally different that coming from one system, it's almost impossible to understand how to do something so profoundly.
So again, I'm gonna talk to Stewart here. The issue is that in the 1970s, you got 10 to 15% on your deposits in a bank, and now you get nothing.
Right.
So why put money in a bank? right? Right, people used to keep their money under their mattress because of the Great Depression, right? There was a bank run, the banks, even today, there's really not enough insurance to insure all the deposits for banks, right? Same thing with the pension system. There's not enough insurance to insure our pension funds, right? So
But you have choices, you can do real estate, you can do precious metal.
there's no liquidity, right? Right? If I buy real estate, I have to wait to sell it,
With the volatility.
right? So
Wall is huge.
but that's what I'm saying is that the average American pays $150 a year to bank, right? So banking is a losing proposition, despite besides the fact that 2% depreciation in your cash is programmed into it. And there's still, nobody has given an argument against it, saying why will the average American who is, have some incredible economic forces against them today, why are they going to go to a bank when they put their money under a mattress? And actually, there's a lot of great crypto banks out there right now who are not dependent upon you memorizing, 17 digits, right?
But what is liquidity? You can take a haircut and sell real estate tomorrow for 50% off, right? In other words, if liquidity is your loss, is it pure probability of loss?
It's daily liquidity, right? What you want is daily liquidity, right? Like you would have at a bank.
I understood, but if the currency is so volatile, then tomorrow, yes, you can liquidate it, but you're gonna lose, so much.
I'm looking for an answer from Stewart, what his thoughts are, because he's the banker.
Number one, I agree with you. We don't charge anything on a monthly fee, so we believe that we make our money elsewhere at different transactions. But we think that the $15 a month, unless you have $3,000 of deposit, or a losing proposition. So I wholeheartedly agree with you. Number one. Number two, that's why I said we're a banking and a payments platform. So we see the world on as a transactional vehicle. Still today, the regulatory world on payments is very linked to banks. So to have a Visa card, it has to be linked to a bank. To send money, you typically have to be linked to a bank. I agree with you. You could keep your money in Venmo, but ultimately, if you want to take the money out of the system, you have to. There's not a place where you could go get cash unless you get a Venmo debit card. That app has to be linked to a bank. So the banking mechanism is still, at least in the United States, the value exchange. You could argue that crypto is challenging that, and ultimately, that's where the big question for the banks is: what happens on a transactional basis if crypto takes off? Because you really don't need the bank in that instance. So I agree that the whole world is changing, and that the legacy system banks that have been so archaic, built on horrible systems, can't move fast enough for this new reality. And what challenger banks are doing is adapting to needs of consumers. We're adapting to the needs of the hourly worker, right? The people that make $50,000 a year, which is 80% of America, by the way. So yes, and we see it more as the necessary evil of having a bank, so you could do all of these other things. If I want to send money to Mexico, I kind of have to send it from my bank account to another bank account. So it's more of a utility in that sense. Yeah, we want people to put their money there, but more so that they could use it rather than have the deposit.
And just to add another comment, so SWIFT is another big issue. One of my cousins runs a bank in Panama, right? And she says that these, know your customer rules. So because people use SWIFT, if I am in Russia and I am sending money to somebody in Costa Rica and it goes through SWIFT, that has to go through counterfeiting, et cetera, or other types of regulatory issues, which it has nothing to do with the United States. It's just money being sent, right? And so the regulatory issue is tremendous for people who don't even bank in the United States. They're not American citizens, et cetera. So that's another reason why people who do money transfer don't want to use SWIFT or the American banking system. So
No, but let me clarify that. Everybody sending money from the United States legally has to go through a KYC, a no transaction. There's a lot of regulation on moving money, whether you're a bank or non-bank in the United States. Western Union is not a
non-Americans.
Well, but most countries do have rules and regulations, including Russia and other markets. Are they as strict as the United States? Probably not. Some are tougher, by the way. But most of the world does operate on a money laundering type regulations, whether they have higher indexes of bypassing them or not. But I would say that most of the world does.
Any other questions from the audience? We have like 1 minute. Okay.
Oh, I sat down for a minute, but Bloomberg had an article on Tether about a month plus ago about, what's actually behind it and how do you know? Do you guys have thoughts on that? Obviously, it's theories every which way, but everyone seems to kind of ever forward with it. So I don't know if you had thoughts there.
It's a great topic for the next panel because people have actually talked about Tether.
Okay.
So we'll talk about it next panel.
The next panel. You can dodge it, guys.
Great job, guys. Thanks so much. Arthur, are you there? Arthur Markowski.
Yeah, hi. This is Artur Mazowski. I'm here in Palo Alto, in California.
Fantastic.
Veteran.
Wait 1 second, Arthur. We're gonna get started. Thanks. Great job, guys. Thank you.